Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transactions. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The deferred sales trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
Hello, everybody. Hey, welcome to another DST Masterclass with Capital Gains Tax Solutions, where we believe most high net worth individuals and those who help them, they struggle with clarifying their exit plan and ways to defer capital gains tax, and also build wealth in changing times, where you have a lot of things happening right now in the marketplace, and people looking for clarity, confidence, and a plan. And so we're here to work together to help refine those plans, refine what's possible, and also answer live questions regarding the deferred sales trust. It could be a 1031 exchange, it could be cost segregation, it could be a number of things, so you can create and preserve more wealth, or help your clients, friends, and family do the same. For those who don't know me, my name is Brett Swartz, and I'm the founder of Capital Gains Tax Solutions. And I just believe everyone needs an exit planning coach, right? Because you worked so hard to build your real estate portfolio, you've worked so hard to build your business, or you did really well in cryptocurrency or something else that has extended your wealth to ballooned it to a big number. And now you have this gain, and this gain is going to be taxed somewhere between 25 and 50%, unless you properly structure a plan and work with the team to make sure you can defer that and try to help mitigate some of those taxes along the way. And the government gives us these tax incentives to encourage us to keep money in the marketplace, to create more jobs, to create more housing, to do things that they don't do very well, but they can't force us to do that, but they can tax incentivize us to do that. And so this is what we're here to do, just to kind of see what's actually possible and how these things work, answer your questions, and then also talk about live deals. So that's a little bit of the vision. We're going to also introduce some of the team. We do have Jake Miller, who is the financial advisor, CFP, expert in the deferred sales trust now as well. One of our strategic alliances, our go-to financial advisor. Jake, how are we doing today?
Doing very well, Brett. Calling in from the country of Colombia, where we have some projects that some DST clients might invest in. Very happy to call in today.
Phenomenal. I love that. And hair is on point today. I got a haircut to try to catch up to you a little bit, but I have that thin hair. On who has a thin hair where it kind of goes anywhere you want it to go, but it's hard to get that, that soul glow. You remember that one, Jake? I got to watch that movie again, by the way. You haven't seen Coming to America in a long time.
You got to watch it. Yeah.
Put that on your list at least once a year, right? Just to remember where we grew up and what happened during those times, right?
Now, speaking of that, it looks like Pierce and I have coordinated. Pierce, I didn't know that we went to the same dresser to buy clothes.
Yeah, that's a Christmas gift. Free jacket.
Very nice. Very good.
I appreciate that, Pierce. You're looking really good at it. Did you also shave for us today? It's not just a mojito on the beach.
Dude, for you guys, this is a big day, man. I got a live deal that I'm going to be underwriting on video here, so you guys can catch that afterwards.
I'm excited.
We're doing a little cash flow comparison.
That sounds awesome, Pierce. For those who don't know who Pierce also helped co-host the Capital Gains Tax Solutions podcast. He's a commercial real estate agent and luxury agent down in Newport Beach. And he's also one of the foremost, I guess, even becoming a thought leader on the deferred sales trust. He's got it very dialed in. So that being said, let's dive into let's do a deal close story of the week. How about that? We haven't done that actually in a little while. Let's just dive right into some of the practical deals that have closed recently. Let's see. Maybe I'll let the audience decide. Okay. We can talk about a $17 million land deal out in, actually it was a $28 million land deal in Georgia. We could talk about a $17 million billboard land deal in Sacramento. We can talk about, let's see here. Jake and I just did a sale of a property in Oregon for a financial advisor who is cautious and skeptical and, answering all the questions. He's actually a financial advisor, right? So does anyone have a vote there? You can put it in the chat. You can just say hello.
Yeah, $28 million land deal.
Okay, cool. So it's in Georgia. These two brothers were selling along with another gentleman, and they've developed this land. They bought it many, many years ago. In the path of development, they saw what was coming. And essentially, it was, I don't want to say it's hitting the real estate lottery. It's more so buying and being very patient. It takes a particular investor to buy land in the path of growth and wait many, many years. I want to say they held the property for over 10 years. And then you also slowly develop it as in entitlements. It doesn't necessarily mean you're breaking ground, but you might be putting some utilities in. You might be rezoning it with the city and working through environmental stuff and mitigating different things that in order to allow a developer to take it, vertical. Okay. So they had a huge gain and a huge tax, and they met. This actually was about 2 years ago, because land deals take a long time. In general, they're just longer escrows for a number of reasons, and then COVID hit, so things stalled. But finally, as of 3 weeks ago, it closed, and the funds are now invested, and he's deferred a lot of tax. And he actually happens to be an insurance professional and real estate expert. So he's seasoned, investor and a credit investor, and very smart with real estate and insurance and in stocks and bonds and mutual funds too. He's a very well-rounded client. But one of the best parts is I get a chance to learn from clients. And so that's kind of the short story. And we're moving forward, and he might do more with us, but it's a good part of his net worth, and he's excited to be able to be a little more passive at this point, a little more diversified. And I think also just to kind of be finished with this land that's, you always think it's going to go big, but it's not until it closes that you actually get paid. Or at least in like a multifamily deal, you're getting the cash flow. You're seeing it probably every single month. Land, it's a speculative land play of what it's going to be. It's not cash flowing. Typically, it's just appreciating. So, Jake, you want to pull any nuggets out of that one?
Well, I have a few questions, Brett. You mentioned that this individual has a lot of different investments, a lot of different assets. This is a very significant part of his net worth, but he has other things too. So outside of this land deal, do you expect that this client will use the deferred sales trust again?
So a lot of the investments now that he has were already in the stock market and insurance products. He's already kind of an expert in that. So this land portion represented a lot of that holding for real estate. And so with the deferred sales trust, yes, it can work for public and private stock. However, they're single stocks. It's not as if you have 50 stocks that are worth 1 million that you could use it like a mutual fund. It has to be like, for example, you bought Apple for 100,000. Now it's worth 2 million. It has a substantial gain. So I don't anticipate him using it for those other liquid investments, because I don't believe he has a single stock that has that huge appreciation. And as far as the other real estate, I don't know that those are large enough. This was his largest holding. So that's the answer to that, Jake.
Very good. So even if he doesn't have other assets that he might need to use the deferred sales trust for, what do you propose? Or, I mean, maybe you're still in the initial planning stage with him. However, you did mention that he's a rather sophisticated individual. He's a financial planner. What plan does he have going forward to reinvest?
So right now, so he's an insurance professional. He's not a financial planner, but he's done he's very comfortable with options and stocks and all of those things. So
So
right now,
this is a very traditional deal where they sell this asset and then reinvest it in the market and reinvest it in liquid assets, which, for a lot of the people who do the deferred sales trust, is kind of their go-to until they find the next opportunity, right?
yeah. So for example, some T-bills, some dividend paying stocks, dollar cost averaging, right, is kind of the initial framework for this. Also some lending, real estate lending with the group that we work with. And those are the main things. But the key is having some liquidity, right, and some diversification. And it was interesting because he said a lot of my other equity is in stocks already. So this was real estate. So he goes, I also I want to be conscious that I don't put it all into the stock market, right? And so for him, it was, can we give some alternative investments that are real estate that work within the DST? And the answer is yes. Multifamily fund, and then a housing fund, and then a lending fund with multifamily. So that's the general take. And then we'll see how the year goes. Then there might be opportunities. He might go back into other real estate deals, maybe, if he wants to. But I think he's more on the retirement passive part is where his lifestyle is taking.
Very interesting. I think that's good for people to know and understand, because you have your serial entrepreneur who's looking for the next bigger deal and it's getting bigger and bigger and bigger. You have your individuals who are just taking it easy, kind of coasting along or sailing off into the sunset and looking for things that are stable and predictable versus the next entrepreneurial adventure, right?
Exactly. You can be both. And that's the part of the 10 deferred sales trust freedoms is you can have the retirement freedom. You can be out of the 1031 exchange, race, and you can get freedom from that. And you can also be an entrepreneurial. And so you have the freedom to be entrepreneurial. It's called the entrepreneurial freedom. So now there are some things that we need to be in mind. We have to keep to at least 20% liquid, right? And typically investment grade securities to not over concentrate the trust into one single thing. And these are all the things that we work through with you and as the note holder. But yeah, if you want to be entrepreneurial, you absolutely can. And that's the cool thing. If you want to be passive and retired, you can as well. Pierce, any other thoughts or questions on you want to throw in anything there?
Yeah. Do you think that he's going to have any sort of itch to do any sort of other entrepreneurial or real estate deal in the future?
I think if the opportunity presents itself. I think right now for a lot of people, when they come out of a large deal like this, that's taken many, many years, especially business owners that have poured everything. Emotionally, it's a lot to sell real estate, but also even businesses. And to kind of just take a breath. And the cool thing about the deferred sales trust is you have that time freedom. You don't have to rush into anything right away. In other words, it's almost like you got out of a marriage, right? Or you had a child that they graduated or they from high school and they're going off to college. Like you're kind of letting them go. You're letting that business or that big investment go. And now the DST creates this kind of safe harbor, right? This place where you can relax, you can be calm, you can sit in the bank, you can sit in U.S. Treasury bills, and you can just relax and wait and see. Especially right now, I'm sensing, get Jake's thought on this, that a lot of people are uncertain about what's going to happen in 2023. Are we in the recession? Are we getting out of the recession? Are things going to get really, really bad here? What's it going to look like? So the ability to not have to do anything right away is a powerful freedom. Jake, do you want to speak about that?
Right now, a lot of people, because of the uncertainty that you're talking about, Brett, are switching their modus operandi, or they're switching their investment, the way that they invest, I guess I should say. Traditionally, a lot of people have gone straight to the stock market. It's easy to find a financial advisor, or they can do it themselves, etc. Now, more than ever before, they're considering the people that have traditionally been in the market are looking for a change, and they're investing in real estate. And the opposite is also true. We see people that have invested in real estate forever now open to maybe the market or maybe something new like a business venture, lending. A lot of people, more than previously, who've never lent for an interest rate for a gain like that with a contract, are looking to attorneys, looking to accountants, looking to their advisors to help them set up that next deal, simply because what they've always done before is changing. The market is unpredictable. And when I say the market, I mean, we've got the stock market, we've got the real estate market, we've got all of these things. And so the lack of certainty, Brett, or the the way that things are changing are causing people to also change how they invest.
And this is part of why we're on the mastermind here, right? To wrestle with these ideas, to engage our minds, to clarify where we're trying to go, and also to help build a team. We want to be a part of that dream team for you, whatever you're doing, whether it be buying real estate, selling real estate, exiting businesses, managing capital, and or point you in the right direction to build a dream team so that you feel confident and you have clarity and you have conviction on how to navigate these waters, because the pace of which things are changing and moving seems to be ever increasing. It feels like time is being squeezed in a lot of ways, and to have a team and to have the certainty of execution on how to execute in and out of these different markets and different deals is so important, as well to do it in a tax flow efficient way, which is what we're here to do. So that being said, that's kind of the deal story, kind of digest a little bit of the deferred sales trust. I do want to open it up for live questions. And I know, Pierce, you do have your deal, which we'll go through. But it looks like we have one here. What is his lending box for lending fund? It's a direct message. What is his lending box for the lending fund? I think you might mean, who are the investments? So we work with some large groups that do multifamily ownership, but they also do multifamily lending. Part of our strategic alliances, one of them is called DLP Capital. And what's cool about DLP is they typically only lend to top tier preferred private groups or owners, individuals that have at least 20 deals under their belt. They have an average of $4 million net worth. They are personally guaranteeing the debt. They're also first position loans, 55 to 60% LTV is the range. They've never lost a single dollar in this lending fund, and they're doing a large volume of these. And if the person doesn't pay, they have the expertise and the management and the people on the ground to be able to either help them out to work it out, and or if they have to foreclose, they typically are able to improve the property and still take it at it and not have to really lose any money on the lending fund. This is part of their model. So I don't know if that answers the question about the box, but the trust can go into these types of opportunities. They can also start their own lending fund or their own lending group, and they can lend funds to businesses and owners. So it's very flexible there. So hopefully that answers the question, Rafael. Good question. Who else? Who else has a question or a live deal that you'd like us to answer right now?
While we're waiting for that next question, Brett, that last piece that you shared, that they can create their own lending box or that they can create their own lending program. Can you talk a little bit more about that?
Yeah, so the deferred sales trust is kind of open source for the entrepreneur. So let's imagine you might say, look, I'm very entrepreneurial as far as real estate's concerned, but I think values are still pretty high. And I think cap rates are still too low and interest rates are still pretty high. And so I don't necessarily want to be directly owning real estate and taking on a bunch of debt or buying at these prices. However, I wouldn't mind lending to those that are in commercial real estate, right? For a safe LTV. So you're still in real estate, you just maybe protect it more in case the property gets they don't pay, you can take the property back at 50 cents on the dollar. So that is the different way of investing into real estate without having to be a direct owner, but using the trust to partner with you to form a lending business, right? It doesn't have to be like kind because they're not a 1031. And you are running that business and you're in the business of lending funds to, let's say, a multifamily developer or a real estate developer or construction or fix and flip, right? So that is the as long as you're an active owner and you're not lending it to yourself and you're not lending it to like family, it's actually business purpose, it's legitimate. Does that answer the question, Jake?
It does. And it goes a little further to help Raphael's question. He just commented that was perfect. So appreciate that.
Yeah, I actually wanted to elaborate on that a little bit more. So essentially, I'm familiar with DLP. They're a big player in the private money space and what they created. But more along the lines of things that I do, like in California and stuff that I do nationwide, is they are trustee investors. Essentially, they're private people, and you underwrite to their risk criteria. And like I said, lower LTVs, seasoned investors could be, commercial buildings, whether it's residential, and then essentially be a private loan to that person, whoever is part of that DST.
So what's the question there, Raphael?
So are your DST clients willing to make private loans out of their DST? Is that something they're doing at this moment or thinking of?
Oh, our particular, each client's different, right? And different expertise and different risk tolerance level and different comfort. So no, I don't know any of our clients that are making individual private loans to individual investors at this time, but could they? Yeah, if that's what their expertise and their comfort level is, sure.
Okay. I also had another question, but it's kind of along these lines. Can I go ahead and ask, or do you have like a presentation to complete? Okay, so I was helping this one client. I was able to we were about to get financed, but long story short, he changed his mind about getting the loan. It was a private loan. I was going to literally get it done in 4 business days. But the problem with the whole thing was he was in 1031. He fell out of 3 or 4 other properties because the sellers didn't want to make the necessary adjustments to the price or fix the deferred maintenance on the buildings. So his last day is January 16th, which is a federal holiday. So per 1031 guidelines, even if your end date falls on a federal holiday, it doesn't extend an additional day. So he ran out of his 180-day period and is going to get hit with taxes, capital gains for that property he was selling inside that 1031. So how would someone like that use the DST? So he wouldn't be in that position because, like you said, that race to the 1031, you have 45 days to identify the property and 180 days to complete the transaction, and sometimes that's not as easy to complete.
Yep. So how do we save a failed 1031 exchange? Pierce, you want to take this one?
Sure. So there's 2 options, really. Depending upon how early someone gets in, right? We can set it up so that the DST would either be the primary option, right? So they don't actually have to do a 1031 at all. And they could, eliminate that altogether. The second option is they could also start a 1031 and plug the DST in as a backup plan. Jake can speak a little bit more to this, but there's a lot of what he likes to call intent behind certain tax strategies. So the intent kind of has to be around this idea that, we're trying to reinvest and, not just trying to, quote, avoid taxes. And Jake, maybe you can speak a little bit more to that. But the idea is that, we could save a failed 1031 exchange if they're already in a qualified intermediary, right? They're already inside of their exchange, depending upon if the exchange will cooperate. So we really like to use our qualified intermediaries because they work with us, they know us, they like us, they are not going to give a hard time. Some will just basically, kind of say pound sand and not cooperate with us at all. And that's because they're afraid of losing business, right? Like it's a situation where, they're going to lose out on their deal. And so they don't necessarily like to do that. So ideally you would get in early. You would use our, strategic alliance, our QI team that is awesome and amazing. And if it's, ends up you not finding your deal in 45 days, you have, at that point, we could move it into a DST or, 180 days, day 181, we could move it into a DST and we could save the 1031 that way. We've kind of come up, on the tight timelines with some of these deals where it's like, hey, my exchange is, ending in 7 days and the deal's falling out. And we're kind of like, all right, like pressing really hard, but like typically those don't work out. So it really is important to catch them at least early in the exchange, if not preferably way before the exchange, and even more preferably 6 months before the sale. So hopefully that answers your question, Brett.
Yeah, it does, Pierce. You did a great job. And for those who want to find out, you can contact us. You can go to capitalgainstaxsolutions.com. You can also contact Jake, strategictaxsolutions.com. And then Pierce is at kingdomluxuryrealty.com. So these are all things that we're happy to work with you and get you connected with our strategic alliances so that you never have to feel trapped by a 1031 or have your client in a situation where they're in what's called 1031 QI jail. and they just won't cooperate. And you're just like, well, and this happens every single month. I have people call me and say they're with some of these bigger, really well-known, 500-pound gorilla, starts with an I, ends with an X, and we just say, never use them again. They're like, I'm never going to use them again. Like, they're literally just blocking and stopping what, and for me, and they're not the ones that are responsible for the tax. I am, and I'm the one, and so it's a whole mess. So I don't know who they're with. If they're with an independent QI, a little more nimble, not as big corporate QI, then we perhaps have a chance to still help. Why don't you get it with us offline on that? If they're one of these big boxes, the odds of it being are completely probably off. But even then, like, we can't even guarantee that. We have to see the exchange documents. We have to see the language. We have to go through it. So what next questions does anybody have? Or do you have any questions, Raphael, on anything we just said there?
No, I appreciate the explanation. One thing that I come across is sometimes, since I am also a lender, like, what if we are close to 1031, things are not looking good? How do I get in touch? I guess, so I reach out to you or Pierce to kind of save that 1031. Because if the deal is going south, whether it's the loan or the actual property itself, and they are with some other 1031 exchange company, because I'm getting it after the fact. I'm not doing the sales.
Any of us, just contact any of us. Yeah, just like, here's the situation. Can we move forward? Yeah, we're all happy to work with you.
And how quickly, like, say the same scenario, but we had an extra few days, but it wasn't going to happen. How long does the DST from start to finish take?
We can do deals in 72 hours. And if it's a $100 million deal, we'll probably all do backflips and do a deal in 24 hours. It's just such a, it's like in a Rubik's Cube. Where's my Rubik's Cube at, guys? I don't know. My daughter might have taken it. It's like you're asking a question that it's hard to answer until we know the complexity.
I completely understand. There's a lot more to it, but I'm just trying to, like, have an idea. So when I do talk to clients about something like this, like, hey,
the answer is early. The answer is urgency.
As early as possible.
And here's the thing, right? We are no charge, no obligation, conditional engagement agreements. So we don't charge unless it closes. So it doesn't hurt to have a call. So get them on a call with us. Let's talk. Let's start to move that Rubik's Cube around to see if we can't line up some things to make the timing work out. And we'll be the first one to say it's not going to work out, and then we walk away. But, oh my gosh, we can make it work out. And the question is, how much time, energy, and commitment is the client willing to make? How much time, energy, and really dollars are they willing to put into the due diligence of getting to know, like, and trust us, and know, like, and trust the banks, and have an investment plan, and they have their CPA, and they have their tax attorney. They're going to talk to the QI, they're going to talk to their broker. I mean, all of these things start happening when people start talking about very large transactions on a new tax strategy they've never heard about before, with new people they've never met before. And so are they your client, or are they just someone as a prospect, right? What kind of relationship do you have with them? Oh, I have an extensive relationship. Great. Well, that trust, you can transfer some of that to us because you trust us, right? So this is the part where this is what we're doing. We're here to solve problems, but at the end of the day, hopefully we're trying to clarify that you can know, like, and trust us. We have the systems and processes to get it done. We're never going to hold up a deal. On their side, they might, or their CPA might, or their spouse might, or whatever it is. So try to get, my encouragement to you is to get everyone in a room, bring their CPA, bring their brother-in-law who's a skeptic, bring whoever, everyone into a room with a call with us, and we'll all talk about it. And usually within an hour of talking with the tax attorneys, myself, Jake, and Pierce, people go from 0 or 10% to 80 or 90%, and then they do the deal, and sometimes it's 100% within 1 hour. Sometimes it takes 2 or 3 hours. But I say, if you give us 5 hours of your time, energy, and commitment to learning about the deferred sales trust, talking with our clients, having your CPA talk with the CPA and tax attorneys, talking with the banks, looking at the investment plan with Jake, and looking at the other options as being a real estate entrepreneur. If you really do those 6 things and you spend 6 hours doing that, the odds of you not doing a deal with us are, I would say, probably pretty low. But if you're not willing to do all of that, the odds of you feeling comfortable to move forward with us are probably pretty low. So does that make sense, Raphael, as far as how I push that pressure back on the client? Because it really is about them, and it's about their plan, but they've got to take that responsibility. Does that make sense?
Yeah, it does. Thanks for the clarification.
Yeah, you're welcome. Jake, any thoughts on that? What I just said, or any of the whole discussion there?
there's a number of different reasons why a 1031 might fail. And sometimes that's a surprise, typically if the accounting's not up to date or the accountant's not brought in soon enough, and there's a debt over basis issue, of which we take the deferred sales trust and oftentimes couple it with other strategies, such as a Delaware statutory trust fund or things of that nature. And we help solve two problems at once, not only the rollover of what would otherwise be taxed as capital gains, but this forgiveness of debt, which provides an economic benefit and is also taxable because of the debt over basis issue. So we kind of get two birds with one stone there.
That's when we love the Delawares, and our 1031s are like our best friend, because that is one of the Achilles heels of the deferred sales trust, which Jake just said. You cannot defer debt over adjusted basis. So let's just say it was a $3 million sale and there was zero basis and $1 million of debt. We'd have to first stop at a qualified intermediary, and we'd put on, we do a partial 1031 Delaware into typically a zero coupon deal to replace that $1 million of debt, which in turn defers or delays what would have been ordinary income tax of $1 million, which is the highest tax bracket. Then the other amount of money can go into the deferred sales trust. So in this scenario, $2 million can go into the deferred sales trust. In this scenario, you'd pay about $200,000 or so, so it'd be about 1.8 or so would go into the deferred sales trust. And so that's the beauty of how this can work if you have the proper team, the proper planning, the proper QI. So yeah, great insight, Jake, on that one. So now, Pierce, I think you had a live deal you wanted to go through.
Yeah, so it's an interesting deal because it's came out the cold call. It's a property on Lido Island in Newport Beach. It's about a $2.5 million property. And I called the guy and I said, hey, would you, be against having a conversation about how we could potentially increase your cash flow? And he said, no, he's a businessman. So he's like, do your research and come back and talk. So I started underwriting the deal, and we have I created a deferred sales trust kind of cash flow comparison tool. What's the cash flow like on the current property right that's versus what would the cash flow be, potential cash flow be with the deferred sales trust, just given all the math and information. And so I'm currently putting that into the calculator right now, and we're going to spit out what's the return going to be. And it's going to be very simple, side by side. Hey, right now you're making $5,500 a month on this almost $2.5 to $3 million property. What could you do if you put all that into a deferred sales trust net of attorney fees, right, and closing costs, as opposed to just leaving it status quo? And we're going to just have a real simple conversation of, hey, here's the numbers, right? I'm going to film the whole underwriting thing, so you guys can look out for that, and I'll post that on the video. And, we'll be able to see real black and white, and then at that point, the seller can decide whether or not he wants to sell or not.
I think that's great, Pierce. Do you know what his basis is? Maybe we can walk through it right now a little bit.
So this is the one thing that I'm having trouble. So I plugged his address into Realist, which is basically our tax program that kind of goes through all the property information. The property has exchanged hands like twice, once in 1998 and once in 2019. However, what I cannot find is a sales price for 1998 or any sort of debt on the property. So I'm wondering if it was a family member that switched over from the trust, or if something happened. And there's no sales price. So what I ended up doing is I ended up going back to 1998, the entire year of 1998 to 2005, to try and find a property that closed, and just to understand what the values of the property were at that point. I found out that one property was 3,100 square feet. It sold for $1.2 million with $400 a square foot. If I apply that to how many square feet it is, his basis is about $500,000.
So pause real fast, just to keep it. So why not just ask the seller, what's your adjusted basis?
Because I don't talk to him right now. So I'm going to underwrite the deal. I'll call him and underwrite it and all. What I wanted to do is I kind of wanted to just solve that problem. Like if you're not able to talk to the seller or you weren't able to, get a hold of it, that's definitely a question that I'll verify. But for just the purpose of the video, that's what I was going to do.
Okay, yeah, I've got it. All right, and my only feedback would be, you don't know how much he's improved the property, which is tough. Like they may not be on the tax roll if he's put $1 million of improvements in, which is going to adjust his basis. So the simple questions to ask would be, what did you pay for the property? Right.
Yeah.
How much improvements have you put into the property? And have you taken regular depreciation or accelerated depreciation?
Sure.
And you can always just say estimate. I bought it for about $500,000, Pierce, 20 years ago, and I've depreciated it every year. You probably is it unreasonable to say you're probably next to zero for your basis? Yeah, I'm probably next to zero. Okay, let's use it as a baseline. Save all that time and energy, but it's good to think through that. I just want you to be able to speed this up, and also to be able to do it live. Like I have an HB12C, by the way. If anyone doesn't have this calculator, I would highly recommend it. It's a great way where you can move numbers and store numbers quickly. It's a financial calculator, but I would take 2.5 million. Let's imagine it's zero base. Is this in California, Pierce?
Yeah, 37% tax for sure.
Okay, and probably even more with depreciation recapture. So I'm going to use 40% as the average. Okay, so that's $1 million of tax. And do you know how much he owes on it, Pierce?
I can't find any debt.
Okay, so let's just assume he owes zero, but it's another question to ask him. Well, hey, how much you owe on it real fast so that I can do a proper analysis. Because the worst thing for you to do is spend all your time and energy on these numbers that aren't lined up. So when you show up to the proposal, you don't have clarity on that. Now, but remember though, the purpose of a cold call is to get the meeting. So if you're there and you're talking with him on a call, it's not to have the meeting over the phone call, but it is to get the meeting. So set the meeting first. Great, I'm going to be meeting with you next week, Tuesday at 3 o'clock. Fantastic. You set it, you get off the phone. You might send him a quick text message. Hey, in preparation for the meeting, curious on these 3 questions. What's the debt? What's the estimated basis? And what do you think? I kind of already knew the value, so you really don't need anything else there, right? Now you can show up with at least some rough numbers, but even then I'd be cautious to even present all of that. If now at the meeting you're there to uncover his needs and his challenges. Right. The worst thing you do is just show up and just give a proposal and be like, hey, I assumed or thought that you just wanted more cash flow. And that might be 10% of what he wants. But the black swan or the 90% of what he really wants is completely different. And he might not even know that until you're talking with him. And now you're uncovering these things. And as you uncover that, you say, hey, I'd like to come back to you and show to you. In other words, don't feel so anxious to have to propose the cash on cash is so much greater. That is your interest generator that he was interested enough to be open to increasing his cash flow. That's great. That gets you the face-to-face. Now, like a good doctor, try to really assess where he's at with his lifestyle, with his finances, with his property management, with his thoughts and feelings about the future in the economy and his plan for retirement. And in other words, be an expert as it pertains to all things to help him with what he's trying to achieve. Then at the end of that meeting, you're going to say something along these lines. Assuming we could agree on price and terms, and to your satisfaction that I could help you solve, increase your cash flow and solve the challenges we talked about and help you to get to the desires that you want to go. Is there any other reason why you wouldn't allow me to exclusively list the property and sell it and exit into a capital gains tax plan that suits your needs? Then you just be quiet. See what he says. And he's going to bring up his objections, and he's going to think about the things that are going to hold him back from doing business with you, right? And you want him to tell you that so that you can say, great, if I can come back and in my proposal show you how I can address those concerns and those challenges to your satisfaction, is there any other reason why you wouldn't allow me to exclusively list your property, sell it, and move it into a plan that suits your needs? And you want him to say, no, there's no other reason. Great, I'm coming back next week and I'm going to do a full detailed analysis on your property, on the exit plan, on the cash on cash return differences, all of those things. And then you come back with that, with the listing agreement, all prepared to go. And that is the proper way of moving through the sales cycle to help people have the time and the space to actually digest what we're trying to communicate with them. Does that make some sense, Pierce?
Makes a ton of sense.
Great.
Makes a ton of sense.
All right. Jake, any thoughts or feedback on that?
No, I think it's very clear. And at the end of the day, it's the importance of having the right team or the right people with you to help navigate the deal. A lot of our clients here that might be on the call, that might watch the call later on, they've got their deal and they've done really well to negotiate the terms, or, you know, they're at least to the point where they're feeling good enough to sell. And we come into the picture to help them sell and receive gross proceeds net of attorney fees rather than net of taxes, which greatly improves their deal, right? But at the same time, we need to be brought in soon enough, you know, when they're negotiating the deal, they have a letter of intent, things are starting to get serious, what have you, so that we can help them avoid any pitfalls. We can help them make it smooth with the seller so that it's just, oh, okay, yeah, you have a trust. Okay, that makes sense. I mean, a lot of people have a trust, and move forward without any hiccup, so that it's not an 11th hour or last minute change that causes everybody to pull out their pens and get their little magnifying glass and look at the deal again because they're concerned about last minute changes, if that makes sense.
Makes perfect sense, Jake. Yeah, it's preparation, and it's also why we work on a conditional basis, right? So 100% conditional, meaning if you don't use the trust or you don't close your deal, or for any reason you decide not to use the trust, you still close your deal. Like, you don't owe us anything if you don't use the trust. So we take that pressure off. We don't want that to be the reason why you don't move forward because, oh, I'm not sure if my deal is going to close, or because, yes, it's important that we set it up prior to the contingencies being removed, and or setting up the QI prior to your deal closing, because if you go off to a wrong QI, and typically even before the listing starts, it's good to have your exit plan, right? So that you're not catching the buyer off guard last minute to make some kind of change. And so we will work on a conditional basis, and we give you an option to exercise using the trust. And you tell the buyer up front, and everything goes great, and it's super smooth. And when we do it that way, but sometimes people don't know. You're finding us right now, and you're like, oh, I got 10 days to close. Oh my gosh, can you still perform? Yes, we are happy to help and work with you if you're willing to commit your time and energy to get everyone in the room at the same time, basically, and or multiple calls to get things moving forward. So sometimes we're like ER doctors, right? People rolling people in. You know, we've got 48 hours, 72 hours, a week before they're out on the table here, and we've got to kind of resuscitate them, right? But there's certain points where we cannot. By the way, if you're selling a primary home, crypto, business, stock, there's no 1031 option. So we absolutely have to be with you set up prior to the buyer moving on contingencies. So if there's at least one contingency remaining, we're fine. But ideally, we're setting up even before you list. But even if you've listed your escrow, can you still use the DST? Absolutely. What is the cutoff? If they have removed all contingencies, it's over. Unless you're selling a investment property and then you use our strategic alliance, which is the qualified intermediary, to buy us another 45 days, okay? So that being said, what other questions does anyone else have at this time? And I want to just invite some people. We got Ravin, we got Raphael, we got Sylvia, we got Steve, we got Maria, we got Debbie. We've got Miss, I'm not sure how to pronounce quite that name, but I'm going to do my best to pronounce the last name, Mr. or Mrs. Baja, I'm not sure. I'm sorry. I'm not doing that very well. So we also got Micah here. Micah, we haven't heard from you today. How you doing, Micah?
I'm doing well.
Excellent. Happy New Year to you.
Thanks.
Yeah, is Utah cold right now? Because it's kind of cold here in California.
Crazy.
Yeah.
Have good snow.
Yeah, we have had a lot of snow actually.
Yeah, in fact, Micah has some new body art. Micah, can you kind of show what's going on over there?
Oh man.
Yeah, the kids decided to help me decorate it.
Nice. Good art. Well, hopefully that's going to recover fast, huh? How long the cast until it heals?
I'll have it on for another month and a half.
Okay. Pick a good color there. Orange is a good color.
Yeah.
It's a bummer. You're like, it's the worst. I've never broken an arm yet. I've done ACL surgeries, so those are not so fun. But Hope you get well soon, Micah.
Well, everyone should choose to only use one hand and type for the rest of the day and see how you like it.
And it's your strong hand too, right? You're right-handed?
Mm-hmm.
Yeah. Well, feeling for you there. All right. If no one else has questions or thoughts, perhaps we can just wrap up. Jake Miller, if people want to find you, what's the best way to find you?
Well, we have a website. It's strategictaxsolutions.com. So strategictaxsolutions.com, as well as an 800 number, 1-800-773-1848. Give us a call. Stop by the website, schedule a meeting.
Pierce, if people want to find you, where can they find you?
I mean, kingdomluxuryrealty.com. Also check out the YouTube channel, Living in Newport Beach, California.
Excellent. If you want to find me, you can check me out at capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. We have the new book coming out too. Love your support. Building a tax-deferred exit strategy. We have people like Kevin Harrington from Shark Tank in the book, and the great Jake Miller, who you just heard from in the book. So capitalgainstaxsolutions.com. We also have the YouTube channel. We're on Spotify, we're on iTunes, all things Capital Gains Tax Solutions, Instagram, LinkedIn, all that stuff. If you want to call our office, it's 916-886-2986. It's 916-886-2986. Thanks so much for attending, watching the replay. Please rate, review, subscribe. Please share this so someone can be inspiration to. We appreciate all your support out there, and we will talk to you every Friday, 10 a.m. Pacific Standard Time, 1 p.m. Eastern. We'll be back again, and take care. Have a great weekend. Bye, everyone.
Recording stopped.